As well, we want to get your take on this. We are about a month away from the next Federal Reserve meeting, where we'll likely see the first rate increase in 9 years. Here's what Berkshire Hathaway CEO Warren Buffett told Liz Claman yesterday on Countdown to the Closing Bell.
Well, someday we will, but they'll probably raise them faster than I would raise them. But what we hear from a good many Fed governors, at least what I've read, sounds like they are going to raise them, but I have no notion on that. I've never talked to Janet Yellen in my life.
And John Hilsenrath, your last article, most recent Hilsenrath analysis, July job numbers keep Fed rate hike on track, meaning September?
Right. We had Dennis Lockhart speaking yesterday, a week after I interviewed him, saying September. That's what he's looking at. A few other Fed officials, including Stan Fisher, have been a little bit wavering a little bit on that. I think there's a real chance that it happens in September, but the Fed has a problem. On the one hand, the job market is looking very healthy. Well, I shouldn't say very healthy.
But
it's
healthy.
Improving. It's continuing to improve. The unemployment rate is coming down. So they like what they're seeing on the jobs front. On the inflation front, they've missed their target, their 2% target on the underside for more than 3 years. And they're uncomfortable with that fact. And they say they want to get comfortable before they start raising rates. The dollar's getting stronger. Oil prices are falling. China is slowing. It's hard to see much inflation in an environment where all those factors are at play. So that's why I think the one point where Mr. Buffett was wrong there is they might do a first step, but they intend to move very, very slowly. And what the market is saying right now is that they're going to move even more slowly than their own forecast suggests.
The market expectations keep changing in terms. I was going to say to you, Dagen, what do you think is priced into this market? But when we get data like we got last week, where the employment numbers were below expectations, it's a moving target. Maybe it's not priced in for September.
They have been it's got to happen soon, September, because they've been so firm about doing something.
And they've got to get out of zero.
And I wanted to ask, because we've had people on the show, Anton Schutz said they need a bullet in the gun, and they need the ability to lower rates if the economy weakens. Is that a reason to move to the upside?
No, okay. I don't think that.
I won't repeat that anymore.
You don't do something that might threaten the expansion just so that you could do something to help save the expansion after you threatened
isn't that the crux
but,
of the issue, though, right there? Are they going to raise rates and sort of interrupt the economy, just as it's getting a little traction?
They'll only do it if they think the economy is strong enough to bear it. And because of what they see happening in the job market, they're saying, all right, they might be ready for that first move. But they're going to be very reluctant to move aggressively after that for all the reasons that we just talked about. I think we get this first step. There's an element of them. They're very, very heavily invested right now in this first step. And there's an element of them in saying, let's just get this over with. Right. Let's just get this first step over with and then see how things respond. Sit back and see how things respond.
Isn't it shocking, though, that all the loose monetary policy for so many years hasn't done more to help the economy and it's done so much to inflate assets?
The thing that everyone has to remember is we had a terrible financial crisis from 2007 to 2009. We had a historic housing bubble. All these things that the Fed did prevented us literally from having another Great Depression. That's why this economy has been so weak for so long.
8 years ago? 8 years ago?
Absolutely. I mean, the economy didn't get back on solid footing until the 1950s after the stock market crashed in 29. 20 years.
Real quick on retail sales, the number to watch this week. What do you think? She's laughing at me.
No. I was laughing at him.
No, I think she
because again, it's the bond nerd and the central bank guy who's talking about how long the economy's going to suck.
Go to bed number on retail sales. Go to bed number on retail sales. That's the number to watch.
The consumer spending has been surprisingly anemic this year. A lot of people thought because gasoline prices had fallen so much, people would be out spending more. But because we're still in a hangover from this financial crisis, people are reluctant to spend money. So I don't think we see great numbers. We see good numbers.
Thank you. Great to see you today.
Love for John. Love for you.
John Hilsenrath. Dagen, we'll see you next hour. Back in a moment.